Managing finances in a startup can be challenging, but it is critical to the success of the business. Here are some tips to help you manage finances effectively in a startup. Create a budget. The first step is to estimate the revenue that the startup is expected to generate. This can be based on sales projections, market research, and other factors. The revenue estimate will be used as the basis for the budget. The next step is to identify the various expenses that the startup will incur. This can include expenses related to salaries, rent, utilities, supplies, marketing, and other costs. It is important to be thorough and to consider all possible expenses. Once all expenses have been identified, they should be categorized into different groups. This will help to organize the budget and make it easier to track and manage. Some expenses may be one-time costs, while others may be recurring. It is important to determine the frequency of each expense and to include it in the budget accordingly. Start by creating a budget that outlines your projected income and expenses for the next few months or years. This will give you a clear picture of how much money you have available and where it is being spent. Once all expenses have been identified and categorized, the next step is to allocate funds for each expense. This should be done based on the revenue estimate and the priority of each expense. After the budget has been created, it is important to monitor it regularly to ensure that the business is staying within its financial means. This can be done by comparing actual expenses to the budgeted expenses and making adjustments as necessary. Monitor your cash flow. Cash flow is the lifeblood of any business, and startups are no exception. Keep a close eye on your cash flow by regularly tracking your income and expenses. This will help you identify any potential cash flow problems before they become serious issues. A cash flow statement is a financial report that shows the inflow and outflow of cash over a specific period. It helps to track how much money is coming in and going out of the business. Create a cash flow statement that includes all the sources of cash, such as sales revenue, investments, and loans, and all the uses of cash, such as expenses, loan payments, and capital expenditures. Receivables are the payments that your business is owed for goods or services delivered but not yet paid for. Keep track of your receivables and follow up with customers who have outstanding invoices to ensure that you receive payment on time. Late payments can have a significant impact on your cash flow. Payables are the amounts that your business owes to suppliers, vendors, and other creditors. Manage your payables carefully, negotiate payment terms with suppliers, and pay bills on time to maintain good relationships and avoid late fees. Use historical data and future projections to forecast your cash flow for the coming months. This will help you anticipate any cash shortages or surpluses and make necessary adjustments to your spending or financing. Regularly check your bank account balance to ensure that you have enough cash to cover your expenses. Consider setting up alerts for low balances or unusual activity. If you notice that your cash flow is not meeting your projections, adjust your budget accordingly. Reduce expenses or seek additional financing to bridge any cash shortages. Prioritize expenses. Prioritize your expenses and focus on the most important ones. This will help you manage your cash flow effectively and ensure that you are allocating your resources in the most efficient way possible. These are expenses that are critical to the operation of the business, such as rent, utilities, salaries, and necessary equipment. These expenses should be given top priority as they are necessary for the business to function. These are expenses that can help the company generate revenue, such as marketing, product development, and customer acquisition. While these expenses are important, they should be evaluated carefully to ensure that they align with the company's overall strategy and goals. These are expenses that are not critical to the operation of the business, such as entertainment, travel, and office perks. While these expenses can help boost employee morale and improve the company's culture, they should be evaluated carefully and cut back if necessary to ensure that the company's limited resources are allocated effectively. Prioritizing expenses should be done in the context of the company's long-term goals. Expenses that help the company achieve its long-term goals should be given priority over short-term expenses. Priorities can change over time, so it is important to monitor expenses regularly and adjust priorities as needed to ensure that the company is allocating its resources effectively. Reduce unnecessary expenses. Look for ways to reduce your expenses without compromising the quality of your product or service. For example, you can consider outsourcing some tasks or negotiating better deals with suppliers. Identify which expenses are critical to the operation of your business and focus on these. Examples may include rent, utilities, salaries, and necessary equipment. Look for ways to cut costs on essential resources by negotiating with vendors or sourcing alternative suppliers. Consider using cost-effective software or free tools instead of expensive ones. In the current age, it's possible to manage most business operations online. Reduce costs by minimizing printing, mailing, and paper-based communications, and opt for digital alternatives instead. Adopting a lean approach means focusing on maximizing efficiency and minimizing waste. This involves reviewing all expenses and eliminating any that don't add significant value to the business. Instead of hiring full-time employees, consider utilizing freelancers or part-time staff. This approach can save on benefits, taxes, and other expenses associated with full-time employees. Keep an eye on your cash flow and ensure you're only spending what you can afford. This will help you avoid overspending and keep your business financially stable. Plan for the future. Create a financial plan that outlines your long-term goals and how you plan to achieve them. This will help you stay focused and motivated, and ensure that you are making the most of your resources. Start by defining your long-term vision and mission statement. This will help you to stay focused on your goals and guide your decision-making processes. Break down your long-term vision into specific, measurable goals. This will help you to track your progress and make adjustments as necessary. Create a detailed business plan that outlines your market research, target audience, marketing strategies, financial projections, and other important aspects of your business. Hire a team of skilled professionals who share your vision and are committed to helping your startup succeed. This includes individuals with a diverse range of skills, including marketing, finance, and product development. Be prepared to adapt and pivot as needed. Keep an eye on market trends and customer needs, and be willing to adjust your strategies accordingly. Regularly seek feedback from customers, investors, and other stakeholders. This can help you to identify areas for improvement and make changes to your business model as needed. Maintain a clear focus on your core values and principles, and ensure that your actions are aligned with these values at all times. Seek professional help. Consider hiring a financial advisor or accountant to help you manage your finances. They can provide valuable insights and advice that can help you make informed decisions and avoid common financial pitfalls. Remember, managing finances in a startup requires careful planning, attention to detail, and a willingness to adapt and make changes as needed. Professionals have the necessary knowledge and expertise to help you manage your finances effectively. They can help you develop a financial strategy that aligns with your business goals and helps you achieve long-term success. Managing finances can be time-consuming, especially when you're starting a business. By hiring a professional, you can save time and focus on other areas of your business. Finance professionals can help you avoid costly mistakes such as inaccurate record-keeping, missed tax deadlines, and financial mismanagement. These mistakes can be expensive and harm your business in the long run. Professionals can help you improve your cash flow by creating a cash flow forecast and identifying ways to increase revenue and reduce costs. Investors are more likely to invest in a startup that has a professional financial plan in place. By seeking professional help, you can improve your chances of securing funding for your business. By following these tips, you can help ensure the long-term success of your business. Please like, subscribe and share my videos with your colleagues and peers.